For today's video, an update on the marketplace, we're going to talk about the lettings marketplace. I'm going to talk in particular to Peter Fuller. Pete and I have known each other since 1983 and we've worked together here in the group for the last 20 years, and he's the Managing Director of our lettings division. Pete, I wanted to talk to you a little bit this morning for the market update about the lettings marketplace, because the more and more I've watched our business change in the last few years, it becomes very apparent that the numbers of properties that we're now letting is substantial. How do you see it? Because we've had the sort of traditional situation where people have been, in our eyes, probably letting smaller properties, but it's not like that anymore, is it? It's very different.
No, I mean, it's changed a lot, Dale, particularly the last few years. Not so long ago, we would speak to tenants and they would want short-term lets. In the last couple of years, it's actually gone the complete reverse. People are now coming in to see us and want far longer certainty.
Now what seems to be happening is more people are renting family type properties, which is why they want the longer terms, because of schooling and things.
Yeah, that's right. I mean, I think the main factor on that is that, 20 years ago, the average age of a first-time buyer was 22. It's changed significantly now. They're now, reputable sources are saying it's upwards of 37 years of age. Well, that's the average age, but in fact what we're starting to see now is people that are into their 40s that are renting through us, and they tend to rent the same property for a number of years.
I'm now getting people ask me, particularly clients, is it a good time to buy? Which I am saying to people that I think they should be buying, in terms of investors, properties that are not typically smaller flats, but they should open their eyes maybe to buying family houses. Yeah,
that's right, Dale. I mean, what we're tending to find now, for many years we gave advice to investors and built a portfolio where we're purely looking at the acquisition cost of the property and the yield from that property. We're actually saying to some investors, well, change your pattern of your buying. There may be a distinct advantage in buying a property for higher capital value, but the benefit to you, you could have the same tenant in there for 5 years. Arla have brought out a recent survey that now the average occupation of a property is around 16 months. That's an average. I would say we've got plenty of tenants who have been in the same property 2 or 3 years, and I can think of at least one instance where upwards of 5 years is commonplace. It'd be interesting, imagine if you asked me that same question in 5 years' time, I'm sure that we're going to have a number of tenants who are still in the same property today that will be in there in 5 years' time. And I think that pattern is set to continue, particularly on what's happening with the coalition government and cuts they're making and their plans for the future.
I'm pleased you mentioned that. So what's your view on that? So we've got people suggesting that, say council houses or social housing is no longer going to be a house forever. We've got suggestions of rental amounts that are able to be paid by local authorities being capped at a certain level.
That's right, yeah. I mean, it's certainly, even today on the way to the office, I heard Grant Shapps being interviewed, and what he was making very, very clear, that they still want to help people, but this idea that people have a council house for life is a thing of the past. They have less houses now for a growing population, and they want to be able to prioritise where people live and make the accommodation fit the family situation. And even by their own admission, they're looking for the private rented sector, our client base, our landlords, to pick up a lot of the slack that will no doubt
Well, that's where I see a lot of prospect, is for the private investor.
Yes.
And
we're seeing a complete change in social structure with regards ownership and renting. You used to have an owner, a purchaser, a landlord and a tenant. It's not uncommon for our clients now for a landlord to also be a tenant of ours, a vendor to also be a tenant of ours. So it's a moving circle. It's less structured than it used to be, and that's because people have to be creative about their housing needs, both now and in the future.
so I'm going to ask you the question that I always get asked, which is, where do you see the market in 3 to 5 years from now? And I think in particular, there's this thought about yields moving up and moving up.
Yeah, it's something we're continually talking to clients about, and it's a question they often ask. We talk in the words of long-term investment, so I would think in long-term house prices will go up, interest rates are low. If you have got some equity, you can still get a very good rate. Most of our clients are looking at yield, and without a doubt we're seeing now rents rising at probably the fastest rate in the last 20 years. And I feel sure that by the end of 2011, rents will be much higher than they are today. I think that's attracting a lot of investors back into the marketplace.
Thanks, Pete, that's really helpful. I really appreciate your time.